Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that the buy side has been dominant and ES has rise pretty significantly. And that's really the challenge heading into today's open is that the market has already moved up a pretty significant amount. And at this point, it's questionable as to how much more is left in this upside move. And for that reason, we have to be very careful on initiating any new long setups at these higher prices. On the upside, we have some short-term resistance here at 56 to 57.5. It's not really a major inflection point, so we have to be careful shorting the market in that area as well. The main inflection point on the day is 59.5 to 62.5. As long as ES can hold below that area, we know that the market can balance and head lower back into the 48.5 to 50 pre-market support, potentially down to the 39.5 to 42.5 initial support zone, and then in the event of a strong downside move or a complete reversal, the 29.75 to 32.75 zone could come into play, but that's still pretty far away, and we have to take it step by step, considering just how strong this market has been in the overnight session. Now, on the smaller time frames, we know the market has been pretty strong and the buyers have been dominant, but the bigger picture has not changed. That continues to be bearish. And for that reason, every time we get a short-term rally, we have to be careful on initiating new longs at those aggressive prices because there is still that potential for failure and a reversal. Now, that reversal doesn't have to happen on the day time frame, right? And that's really what makes this challenging is that right now the markets are balancing in a very wide range, and these turns can take some time to actually play out. So on the day time frame, the market can continue to go higher, and in the event of a breakout above 59.5 to 62.5, the market can go up to 68.75, 72 to 73.5, and then if we have some really strong upside momentum, possibly 76 to 79, and then that is an area that can cap the upside. But that's something that we're really going to have to gauge in real time to see if there is enough sustained upside momentum to carry ES beyond 59.5 to 62.5. So right now, the immediate inflection point and the really important inflection point is 59.5 to 62.5. And that's really what's going to determine the bias on the day time frame. If we can break out above 59.5 to 62.5, then we know that this rally has some legs to it and it can go up to 68.75, 72, 73.5, and possibly 76 to 79, although that's a bit of an extended idea. 72 to 73.5 would be more likely. And then those are still areas where responsive sellers can be active given the larger time frame bearish bias. On the downside, if we fail at this pre-market resistance or initial resistance zone, we can come back down to 48.5 to 50 quite easily, and the 39.5 to 42.5 initial support would not really be a big deal either. So in the event that the sell side holds at the 59.5 to 62.5, then we can balance within a range. We don't have to completely reverse or crash and burn. We could simply balance in a range, and pulling back to the initial support zone would not really be that big of a deal. So 39.5 to 42.5 is not that significant of a pullback. It can still be in a very balanced state as it comes down there. And if we have some strong downside momentum, then even 29.75 to 32.75 would not be out of the question. So heading into the open, the main challenge here is that the market's already moved up a significant amount. It may have already topped out a bit here, and without continued upside momentum, it's going to be very difficult for the market to continue going higher. Now, that doesn't mean we can't go higher, it just means that in order to do so, you need to see that underlying momentum. You need to see the other markets participating in the move, and it can take some effort and it can be a bit choppy. So the risk is on the buy side up here at these aggressive prices, and that's why we have to be careful. At the same time, the smaller time frames are holding up well, so we have to be very aware of trade location and immediate momentum if we're shorting the market as well. And if we take a short, let's say it's at a more aggressive price, then we need to make sure that we have that momentum in our favor, and we're actually getting some decent downside momentum, because a lack of momentum can just kind of result in not really a big change in price, right? Continued balance in a range. And for the sell side to really step in, we'll have to see a break below 48.5 to 50. That would be, a trigger to get a move down into the 39.5 to 42.5. And then depending on how the market reacts over there, that'll determine whether we are going to simply balance in a range above initial support, or if there's some better downside momentum to take us to 29.75 to 32.75. So right now we are, even on the larger time frames, in a very balanced and two-sided market. Every short-term rally is still uh, attracting responsive sellers at the resistance zones on the upside, and we're still getting some decent rotations at the resistance zones on the upside. So that's the type of market we're in. And if we're not getting good location, if there is a lack of clarity as far as the momentum situation goes, and the market's just kind of chopping around, then it's okay to sit out, right? The market's opening on a fairly large gap. We could balance around here before we really get a directional move. So if there's a lack of clarity, just wait, right? Wait for clarity, wait for some directional conviction, or wait for some ideal location where you can initiate a trade, and at least you get some short-term price edge that allows you to see whether the trade's working. Don't get chopped up in the middle of just some sideways range-bound price action. So that's the environment we're in. That is our prep work for the day. So off the open, we'll be watching the 56, 57.5, knowing that that's really more of a reference point. Holding below it would just tell us that the sell side is at least stepping in a little bit, but the primary inflection point is 59.5 to 62.5. So those are the main ideas. Let's see how the market reacts at initial resistance. That'll help set the tone for the day, and we'll take it from there.